Hello and welcome. Happy Monday morning to you. Welcome to Trading with Technical Indicators. My name is James Boyd. We'd like to welcome with us Nicholas, Barat, High Speed, Low Drag, Robert, Billy, Gary, Crispy, Mehdi, and many others. We also got Rachel with us in the chat. We welcome her as well. I've been working with our partners for the last 5 hours, so I've been watching the market nonstop. So anyway, hello Silas, hello Ann, back to you. Now, just real quick, you can follow Rachel or myself on X. There's my handle. Rachel will post her handle there in the chat as well. Make sure you actually follow us there. We do post educational content there and also announcements as well. Now, today when we talk about trading with technical indicators, really want to kind of focus on the discipline to identify and be able to trade what the investor sees in the paper money account. One of the reasons why we have a paper money account is that you can practice trading what you see. And then over time, you actually identify, is that a signal that you would consider taking? Now, also remember when we talk about trading, that doesn't necessarily mean we can't invest as well. Now, when we talk about our examples here today, remember the information is provided for general informational purposes only. Remember that options carry a high level of risk, not suitable for all investors. When we also talk about examples, well, let's say short options like cash secured puts or covered calls, anything that's short options, okay? Those can be assigned at any time up to expiration, regardless of the in the money amount, because it's a standing order or an option to somebody to buy those shares from you. If you sold the covered call or if you sold the put, you would be the buyer of those shares. Okay, so it's not just at expiration. These are American style options where that could happen prior to. Now, that's not necessarily all bad, perhaps. You just got to understand, and we'll kind of show an example of that, what I mean on a covered call and a cash secured put. What happens if you're not at expiration? Could someone still take those shares? If I sold the put, could I be assigned or be the buyer of the shares at the strike price, even though it's not expiration? Yes, we will show that. Okay, we'll kind of talk about the pros and cons, like when would it be a con? When would it be a pro? Let's dive into that here today. And also remember when we talk about our examples, it reminds me of a story I got to tell. Remember that also the paper money software application is provided for informational purposes only. And also remember that investing involves risk. I want to also kind of give you a quick update on the events. We just had the Chicago event over the weekend. If you go to schwab.com/events, actually two new ones we want to highlight coming into the year end. We got the Anaheim Market Drive, okay, which is November 22nd. These are free events. If you're a Schwab client, you could attend. Just go to schwab.com/events, and you could actually click on the registration. You're also going to notice that we're going to be in Houston doing a 2-day event. December 11th, technical analysis. December 12th, the option strategies. That's at the JW Marriott Houston by the Galleria. And also a different little flavor here that we added here is the Miami Advanced Options. That's December 19th and 20th. I couldn't think of something better to put in your Christmas stocking, paper money wise, than actually learning about advanced options and maybe learning about some time decay. Okay, that will also be at the JW Marriott Miami Turnberry. So feel free to join us. Now, just real quick, and by the way, you don't have to live in that area. You might be in that area and you could just say, hey, I want to come. I'm just traveling in from out of town or whatever. Join us. Now, just real quick, we want to kind of talk about where do you start with the indexes first off, okay? We'll talk about index sectors and we'll talk about prices. Then what we're going to do is we're going to talk about the AMD trade example we put on less than 2 weeks ago. We need to talk about that. That was a big move today for the paper money account. We have one remaining thing that we need to address on that. And then we're going to talk about a number of new examples. Today, I would really like to kind of focus on diagonal resistance and kind of buying on the dip using buy, stop, limit orders. So kind of touched upon all three of those things, but I want to kind of sandwich them together. Now, first off, let's pull up the list. So if we were just kind of saying, hey, I wonder where the market is today, this list is a good list to kind of see what's going on, okay? So first off, I'm just going to pull up the cash indexes, SPX, NDX, Russell, Dow Jones. Now, if we looked at those four, you're going to see that they are in trend 3, trend 3, trend 3, trend 3. Now, if you don't get this yet, hopefully today's the day, okay? When there is a trend 3, you typically have higher highs, higher lows, higher highs, And by the way, that higher high could be a brand new high. And a brand new high is not bearish. I think a lot of times what keeps investors from riding trends is, how do I say this nicely? A poor mentality. We're always thinking that if it goes to a new high, it can't go any higher. It's a mentality. It's a mental block. You got to understand that over time they should be going higher because the revenues on those stocks typically are getting higher and the inflation typically gets higher over time. It's mathematical, okay? It's in your mind. If you feel like if you haven't realized by now that new highs are not bearish signals, man, it's been a tough learning lesson in the last 6 to 9 months. Hopefully people get over it. The biggest actually thing is when we see trend threes, you are in what we call bull flagville. And those bull flags are just making higher highs and higher lows. This is why it's important that you learn to think for yourself. Because if I called up 5 of my friends that don't know anything about the stock market, there are a lot of them, they're going to give me comments that might just be based upon their feelings. Feelings? What does that have to do with the chart? The answer? Nothing. Okay, it's just the feelings. Now, people sometimes will make comments like, well, I don't believe. What does your belief have to do with the chart? Nothing. Okay, so we just got to kind of focus on the stuff that matters and leave the stuff, believe, feelings, leave it on the side. It doesn't matter. Say that out loud. Doesn't matter. Now, if we take a look at this, we want to also include, we do see it when we talk about breakouts, okay? Breakout today. Groundhog's Day, we'll take it. And when you actually take a look at it, you're going to also see the Dow Jones breakout. We'll show this in just a sec on the chart. By the way, these crossovers, okay, you're seeing a whole bunch of crossovers, bull flag, but I just talked about that. The one I do want to point out that has been unstinking believable has been the socks, okay? I've almost wanted to just put a sock on the desk so it reminds us to look at the socks. The semiconductors has been, probably one of the most explosive trends we've actually seen in the last couple months for sure on many different stocks. We also see, for example, that gold is approaching fast, really almost the 4,000 level, okay? Unbelievable. I won't point to it. And then silver is 48.5 up 1%. Pretty amazing stuff here. Now, I just want to see if I missed anything. Oh, yeah. When we talk about the new asset class, and this was years ago, okay? New asset class, this is a couple years ago. That actually did go to 126,000. You fill in the blank. So, my gosh, you got like green everywhere, it seems like, okay? Now, is that true like everywhere? No, but it seems like it, okay? Now, I'm just going to pull up real quick a couple charts. So when you look at the S&P 500, and by the way, if you didn't join Kevin and I on Friday, I forgive you, okay? Would have been nice if you were there because you would have been ready for today. So the biggest thing as we kind of talked about last week and started this week is continuation, right? When we kind of stepped into today, going back to where we were last week, these moving averages, they went back green right there. And this was really Thursday, T for Thursday. So you had a cross, but Thursday, you really actually started to see the crossover. So today is kind of just more of a continuation of what we've been seeing, okay? And if it goes to a new high, we're asking ourselves, could we actually go higher? Now, the cash index did not actually go to a new high. You'd have to take a look at maybe the other price to see, did it go to a brand new high? If we look at the NASDAQ, pull that up, you look at the NASDAQ on a cash index basis, that did go to a brand new high, cracking 25,000 big ones. Now, if you take a look at the Dow Jones, did it crack to a new high? Not on the cash, no. 470, that was on Friday, kind of holding back a little bit, moving averages still green, and the Russell, that was a brand new high. Interesting to kind of note there on the Russell, it fell down below that yellow diagonal channel, and then it started creeping back up, and the little hammer time there, you could even say there, inverted hammer, which could still be bullish too, there, and you've kind of been seeing these little hammers and inverted hammers all over the chart as the moving averages are crossing over. Now, here's the funniest thing. You do not need an indicator of the week. Do you know what you probably need? You need to be able to identify and trade what you see in the paper money account. I don't do the indicator of the week. What was wrong with the basic moving average crossover? What was wrong with actually just seeing the hammer, inverted hammer? What was wrong with that? Nothing. So a lot of times as consumers, we like to buy the new and greatest whatever it is. Now sometimes it can be pretty good, but a lot of times that old hammer, the old screwdriver, crescent wrench, it still works, okay? Now, if we actually pull up the sectors just quickly, and then we're going to go talk about AMD for just a moment because we need to. When you look at sectors real quick, okay? If we pull this up, the one thing we do want to kind of point up on the sectors is obviously there's the stocks, there's the technology, which wouldn't be really that surprising considering what we saw in the NASDAQ. Utilities, said not to laugh. Utilities are up there. Energy, so-so. The one that would well, actually two we want to point out here. Number one is the transports, okay? Now remember, number one stock in actually transports is Uber. We said the choo-choo trains were actually getting a pretty decent push there. Keep an eye on transports. Whenever we say transports, we're also saying what? The answer, industrials. And they're right there. If we pull up the chart and kind of say, show me what the transports look like. Now remember, I'm not a big fan of this $ DJT. Many of us would be using a different ticker to be tracking, let's say, transports. Best we actually have that we can actually show right here. And if you look at the transports, fine, okay? If you look at the industrials, what you're gonna notice on industrials, that was a brand new high. Kitty cat pushed actually that space up or drug it up. Want to talk about one of the stocks in that space here today. When you actually pull up, let's say, also the IXV, which we kind of kept an eye on last week, it's not necessarily falling apart. We do have a little red candle here today, but not really retracing that much. So a lot of options here today. Okay, now let's actually kind of talk about what happened today. Kind of interesting. So one of the orders that filled in the paper money account. Now, by the way, we could talk about, anyone could talk about technical analysis. At the end of the day, it really comes down to what was the trade idea, okay? Because it's educational. The whole idea of technical analysis is to identify buy and sell signals, okay? So let's kind of practice identifying the signals with buy and sell signals, okay, and practice. Now, one of the trades that actually triggered here today was 50 shares of AMD. Now, that trade was put on, it was put on 9/23. That was really not last Tuesday, the previous Tuesday, and it was shares of stock. Now, James, why is that significant? Well, the reason why it's significant is if you have 50 shares, the delta is 50. So in other words, that means that for every dollar the stock goes up, it's $50 per share. Not a fraction, okay? Dollar for dollar. Now today, actually, that stock did get a little push, okay, a little bit. And what you're now going to notice is it gapped to the upside. Now, where was the exit on that trade? Well, the exit on that trade was 221.14. Now, if you had, let's say, shares that were purchased at 161 and they were sold at 221, that's like $50. Now, $50 per share on 50 shares, that was $2,500. Now, here's the deal, $2,500 on an account, let's back this out and say, let's say we didn't have that trade. Well, $2,500 on something that was about $118,500 for the portfolio. That one trade was a 2% push to the account in less than 2 weeks. Now, you might say, well, you got lucky. I don't know. I mean, we've had ones that have gone down too. Okay, so let's be realistic here. Now, the other thing that we need to bring up is actually, thinking it was a cash secured put, but it's actually not. It's a vertical. Now, this vertical trade, what you're now going to notice is we always kind of talk about just really quick the numbers, right? 50% if you do a trade, okay, and you get 50% in 10 days. All right. we talk about, for example, if you get 65%, we're talking about trading days, 65%, and you have, let's say, more than 20 days to expiration, okay, 20 days to expiration, and if you get, let's say, 80% ever, that's phenomenal. The only way you get 100% is it has to go massively in your direction or you just run out of time, okay? So if we take a look at this, we're kind of, where are we at here? We're kind of right there. We have 68% right there. So do we have more than 20 days to expiration? The answer, yeah, we do. Okay, so we're at least there. Now, was there a chance that we could have had 80% when the stock was higher? And the answer is, I think it did. Okay, so there was an opportunity this morning on that to maybe even try to grab 80%. So we're $17 off the high, which leads us to believe there was a pretty good chance that AMD was 80+%. We're going to right click on this. Okay, we're going to create closing order and we're going to buy that back. So kind of interesting on that one trade. There's about $2,750, $2,800 worth. Let's say $2,750. Okay, of gains on that one trade. Now I could have lost money on it. Okay, now here's the sad part, right? If someone had only done a vertical, so people ask sometimes, why, if you know about options, would you do stocks? Answer, well, if you did a vertical, you're only making like 10 cents for every $1 the stock goes to the upside. But even that is capped. So this is a great example. You say, man, I got the trend right and it went up massively. That was done on the 2nd. That was on Friday. Yeah, it got to move quick. And we didn't have to take a lot of time. The only reason why I got that high percentage is it just had a big massive move to the upside. But it wasn't like the stock game. So verticals, yeah, I mean, you were able to benefit, but man, that stock position, dollar for dollar gain, that's why some people invest in stocks. Confirm send, and what we're going to do here is going to give back some of the credit initially, pay the commission, and try to grab the $269, and as Hannah would say, spank you very much. Now, that doesn't always happen that it works out positive, okay? But that is a trade that we just needed to address here first. Now, any other questions that you have? Any other questions? Now, as I'm looking to see if there's any questions, I do want to kind of point out, we talked about the transports, okay? And if you look at the transports, is the paper money account in one of those stocks? The answer is yes, and it's Uber Technologies. It was just purchased recently, $95.83. It's sitting here at $100. And what you're going to see is it's up a couple bucks. If we go back to, let's say, Uber and say, what does that chart look like? Maybe is there a reason to potentially consider adding to the position? Funny you say that. Well, what you're now going to notice is we've kind of been chiseling out the support level. Old resistance turning into new support, 95.82. Now, if you think back to what was done on AMD is, AMD had shares of stock. And then what we talked about on Friday is like layering on top different types of strategies. So in other words, maybe using a stock position to get in, and then maybe using a cash secured put, or a long call vertical, or a short put vertical to layer on top of the position. They're different strategies. They have different break evens and so on, different characteristics of really direction, time, and volatility. Now, what I'm going to do on this is, does this kind of show a potential bullish setup? Yes or no? Is this showing like a bullish setup? If we go back and look at this on maybe a 3-year weekly, is it showing a little trend to the upside? Now, if you take a look at that, what we're going to take a look at here is we're going to go back and we're going to add to the position. So if we said add to the position, we know if we chose the route of a long call vertical, well, that's a more directional type of spread. We're trying to make a higher potential gain relative to the risk. Now, if we chose a short put vertical, it's typically more based on probability. So in my mind, I think about long call verticals as profitability, higher break even, and then the short put spreads as lower credit, lower max gain, but it has a higher probability. So trade number one that we're going to do here today is, now by the way, if you look at this, what type of candles do we have here? Okay, and I'm referencing this one. What's this first one that we're circling? That's not perfect. What's the second one that we're circling? And what's this third one that we're circling? Okay, so if you kind of take a look at that, could inverted hammers be kind of signs of where it's chiseling out the support level? Great. Well, if that's the case, what type of trade? Well, if the investor said, James, I want a higher potential profitability, I think the sector could go up. I think Uber, might be one of the stocks that drags the space up. Well, let's go over and see if we can even do options. We're assuming that we can, but let's verify with our own two eyes. Now, if we pull up, let's say, Uber, what we're going to now look at is, we're not going to look at the Octobers. No. We're now actually going to go down to the Novembers. Now, on the Novembers itself, what you're now going to see is we have the first strike in the money is the 100. We're looking at the open interest, and we're looking at the volume. The higher these two are, the more likely the bid-ask spread is going to be narrower. Now, if you look at the put side, you're going to notice the same thing. 10 cent on the bid-ask spread, open interest, 3,000, volume, 300. Now, what I'm going to do in this case is we're going to buy, okay? We're going to buy the 100, and then what we're going to do is we're going to sell the 105. Now, if we did this, if we have the right to buy the shares at 100, the right net is not free, it's $2.20. So we just take $100 plus 220 gives us our break even at expiration. Now, if we position size for this and said, well, what is the risk per contract given the vertical? It's $220. Now, what we're going to do is we're going to go back to this and kind of say, okay, how much risk, if this account is 121,000, 122,000 if we round up, and we're not going to risk more than, let's say, a half of 1%, it'd be $610. So with $610, if we go back and say, well, how many, if we lose 220, safely we could do 2, maybe we could push 3 if we want to take $20 more of risk. We'll do that for this example. We're going to actually buy 3 more. And now when we do 3, you're now going to see 660. Now, it's not that much more, okay? So if this trade went the wrong direction, which sometimes they do, okay, you're going to see that if it goes down, and let's say close below both strikes, the max loss given the vertical, excluding the commission, is 660, okay? Now, if we did 3 contracts, what do we want the stock to do? Of course we want it to go up. Now, I'm just going to pull this up on the Analyze tab just real quick. The Analyze tab, if you take a look at this, it's just kind of showing a bullish position. If we're going from the top right, from the bottom left to the top right, it's a bullish trade, okay? Stock price on the bottom, we can see that, and the gain or loss on the left-hand side. It's not too bad, okay? Profit or loss on the left-hand side, bottom stock price. If this chart is going from bottom left to the upper right, repeating just so you can let it sink in, it's a bullish trade. Now, what you're now going to notice is I'm only going to check the new vertical trade. So if we said, well, how bullish is this position? The answer is 38 delta. So if the stock goes up $1, approximately, the 3 contracts will be up 38 bucks. Stock goes down $1, be approximately down 38 bucks, okay? Theta is almost flat, and you can really look at all the other Greeks are pretty much flat. The highest option Greek is delta. This is a positive delta, which is a bullish trade, and it really it's like similar to owning 38 shares. So if you had, if you had 38 shares, stock went up $2, you could do the math. Stock went down $2, you could do the math. Now, this obviously is not a stock because there is an expiration. Okay. Now, the comment from Dean says, why not 97.5, 105 call? Well, let's go back to that and kind of see what Dean is asking. Let's kind of look back. And so, Dean, let me know why the 97.50. Well, if we look at the 97.50, you're just kind of choosing one a little safer in the money. Let's kind of review this. If you look at the break even, 102.20. Okay, 102.20 break even. If we went to what Dean is asking, take the 97.50, why is someone buying another dollar? Why are they buying further in the money? Answer, they want to actually have a lower break even, a greater statistical likelihood that they could actually be in the money at expiration. By doing that, what you've also done is lowered the break even. So if Dean said, I'm going to take the 97.5 and the 105, safer trade. Safer doesn't mean that you don't lose anything, okay? If our example, we take the 100 to 105, we're saying, look, we're a little bit more optimistic on the price going up, the stock price, and it has a slightly higher break even. Dramatically? No, not dramatically, okay? The difference in the break even is just $1, but that dollar could matter at the end if it's not there. So we're going to take 3 contracts, IRA. We're going to confirm and send that. So on a day-over-day basis, what sector would we be watching? Of course, we watch the transports. If we say transports, we're saying industrials, okay? Now, I want to go back to, just real quick, one of the other stocks we said we're going to keep an eye on. Now, if we pull up one of those stocks that we said we're going to keep an eye on, it's Microsoft. Now, when you look at Microsoft, we were kind of talking about the stock where it was maybe trying to get above the area of resistance, okay? Now, we're all guilty of this. Man, I'm going to get in as soon as it breaks out. If you had $1 for every time you said that, might be 100,000 there, okay? So the question is, do we really mean it? So if we meant it, A, you actually have a rock solid routine, you do it every day and you're not missing. Second, you use alerts. Third, you do buy stop or buy stop limit orders. If we go back to this, what you're now going to see on 10-6, ding, 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 breaks to the upside. Now, a lot of times people will say, well, yeah, it's up $7. I missed it. Now I'm going to wait for it to pull back. Why did they say that? There was no alert. Why did they say that? They didn't do the buy stop limit. You see what I'm saying? They're always late. They're not using the orders or alerts to actually keep them, when that stock breaks the level of resistance. Now, here's the thing you got to understand real quick. Let's say we choose a vertical, okay? And a typical vertical might only have a delta of 10. What does that mean? Well, and this is where I think people might not quite let this sink in. I want to make sure we do this. If you said, I'd like to get in if we went to, let's say, 521, if we chose a vertical and the delta was 10, and the stock went down $1, well, the spread would be down about $10. If the stock went down $2, well, the spread would be down about $20. Stock went down about $3, and the spread would be literally down about $30. Are you telling me that we can't handle a $30 down move on the vertical without panicking? Okay. I mean, maybe that's where we just kind of say, wow, I don't understand the pricing and I didn't realize that I was putting in my mind that I need this $3 pullback, then I feel better. But the $3 pullback on a 1 contract basis is not that much. Now, that's kind of the advantage of the verticals. You could be a little late, a little early, and a lot of times it doesn't really matter, okay? You can be now, if you did a stock trade, if you did a long call, if you did a long synthetic, every dollar counts because you have a greater sensitivity to direction, meaning a higher delta. Now, what I'm going to do in this, if we went back and said, is there any position on Microsoft? Let's go double check just real quick. I just want to see, is there any position? Microsoft, is there anything? Yeah, there's some shares. There's some shares there. If I go to the margin account, anything? No. Now, what I'm going to do is in the margin account, we're going to do a put spread. Now, many people might say, well, Brian, that's $524. Well, just like you saw in the IRA, we only had 7 shares. But what we're going to do in, let's say, the margin account is come to the put spread side. So if we did bullish trades, bullish vertical trades, got a put spread, short put spread, and you got a long call vertical. If someone said, James, I'm a little bit more conservative. I like to trade probability, a greater probability of me being right. That doesn't mean you're always right. What we're now going to do is we're going to click on, let's look and see where the open interest and the tighter bid-ask spread is. If we look at the 510, so I'm looking at 510, that's about 15 cents wide, 15 cents wide, 10 cents wide, 20 cents wide. This one kind of stands out a little bit. That's the narrowest spread that we between bid-ask. If we look at the open interest, it also so happens to be the one that actually has the highest amount of open interest. So I'm going to open this up just a little bit more so I can see maybe the 490 strike. So what I'm going to do is we're going to sell the 500 and then we're going to buy the 490. Now let's kind of verify something just real quick. Okay, if we lose 760 on account at 38,500, it's 2%. Now, if we said, hey, James, I wanted to keep all the losses no more than, let's say, 1.5%, we would just have to adjust the spread. Meaning, instead of doing, let's say, the 490, we would just change it to 495. Okay? There it is. No worries. Let me recap 10 seconds. So when we look at the number of taking the max loss, okay, from 500 to the 490 spread, 490 strike, the max loss was $760. It's a little too much. So what I did is we just changed, instead of 490, we actually said, hey, we're going to change it to 495. When we do that, we unlock that. There's the credit, confirm send, and now we can see there's the number. Now, whenever you see the max profit, the max loss like that, you know it's a probability-based trade. Now, why is it only 127? It's because we're selling a strike that has a delta of 27. Now, there's a lot of investors that do this. They're trying to actually have, greater statistical likelihoods of being right. If we said, well, okay, if we're right, it's $127. If we're wrong, it's $373 loss. There's still a 34% ROR on that example. Okay? For many investors, they might say that might fit the criteria they're looking for. Okay? Now, I'm trying to also show times where the investor might be more conservative or more aggressive. Okay? And we got to also understand that we're not all the same here. Some of us like to be right more, and some of us are thinking, I just want to actually have a higher chance to make more, but I could be wrong. Okay? Going to confirm and send. So trade number 2, okay? Microsoft, a short put spread. Okay? Now, if you take a look at this, we're going to go ahead and send the order. There it is. Now, what I want to kind of do is I want to kind of go through a couple stocks, okay, and just kind of see what we have going on, okay? So number 1 is Boeing, and I'm probably going to come back to Boeing, okay? Boeing, if you look at Boeing, this has been the second time, or recently, where we actually fell down below the support, and then we kind of stayed slightly below it. We broke out. Well, if we're talking about candle, it broke out. Per our definition, no, it wasn't a green candle. It wouldn't be a breakout. But if we're talking about the candle open and closed above it, the reason why I say that's not a breakout per our definition is we wanted it to open and close above resistance. It did that, but it didn't close above where it opened. Hence, that's why it's a red candle. Okay? So per our definition, it doesn't meet the breakout. But it did close above. Okay? It met half the rule set. And now what you're going to notice is we're trying to break up through there again. This is a classic, okay, where the stock gets below support, and if buyers are buying, why are they buying? The only reason why you'd be buying below support is you think there's a greater chance it could come back to the upside. Now, if you take a look at this, we don't know if it's going to do that, but we're wondering, okay? Now, what I'm going to do is, let's say the investor says, James, I want to do a stock trade, and I want to do a buy stop limit order. The buy stop limit order, in this case, we're just going to say what's today's high. Today's high, 221.80. Okay? Now, what I'm going to do is I'm just going to set a buy stop right above that level. Now, you could specify how far you want it to go, but I'm going to do buy stop limit at 222 flat. Okay? Now, on this buy stop limit, we spent time doing this on Friday. I taught Barbara Armstrong class on Friday. We talked about buy stop limits quite a bit. I'm going to put the cap $1 higher than the buy stop price. So in this case, what we're saying is, look, we want it to go above today's high. If it gets above today's high, trigger the order to buy the shares. You're allowed to buy the shares up to 223. And if it goes up, if it gaps above 223 and never comes back down, don't fill it. You're allowed to fill in between this price and this price. Okay? You're bracketing where you're trying to buy the shares of what? The stock. Now, the upside target, let's say the investor says, James, I'm going to try to put a target about 238, which is the top of the channel. By the way, I can't even show you one of these. It was such a classic trade. Some of you probably know which one did this. Broke down below support and snapped back. It was amazing. I can't show you, but you probably saw it. Now, if you take a look at this, 238 limit. Now, remember, that limit doesn't matter unless the shares are purchased. Okay? Now, to the downside, if we said, where do we see support? That support's probably right about 214.60. If we take 214.60 less 2%, it's going to be 210.30. Remember how the stop works. If we set a stop at 210.30, okay, that's a trigger to sell, which means it could fill at a lower price. Read my lips. Okay? Could fill at a lower price. It's a stop. Okay? Now, here's the deal. Data GTC. The target and the stop don't matter until the shares are filled. In our example from last week, we said, hey, we're going to give it a week and see if it can fill. So by next Monday at this time, if it cannot get up to that price and get filled, just cancel the order. Because we want to reevaluate. Is that something that we really want to practice in doing a bullish trade? I'm telling you, this order is probably the misunderstood. It's probably the least, I'm going to speculate it's the least used. When I taught in-person events, over 85% of the people, okay, when I ask how many of you do buy stops or buy stop limits, and you might say, well, maybe that was a couple years ago, but if that's still the same percentage, it's stunning, okay? What that tells me is a lot of people, they're going to be late on breakout setups, and that's why they always kind of say the comment like, I feel like I'm late, it's too high, I'm waiting for a pullback, things like that, okay? Could you imagine walking down the mall and you see a shirt that says, I'm waiting for a pullback? You'd probably start having a good chuckle. Now, there you go. Now, if we take a look at this, the one thing we got to double check is the number of shares. That is too high. What I'm going to do is going to go back to this. Let's say at the most, we take a $3,800 position. If we take $3,800, it's going to be 17 shares. So I'm going to put 17 shares. So if we did 17 shares, it's going to be about 10% of the capital of the portfolio. Okay? So remember, it's this order. When you pull this up now, there it is. It has 1 week to fill. Okay, that's it. Now, some of you are comedians. I'm just trying not to laugh there. Send the order. Okay, there it is. Now, what I want to do is I want to kind of show a couple other stocks that are kind of showing that there, by the way, there's been some trends that have very similar, like PayPal and Boeing are very similar. When you look at PayPal, old support used to be 70.26. That did turn into like resistance for a while. Today, PayPal poking back to the upside and trying to break inside the old channel. Okay? Now, the comment from Dragon Rider 108 is, why only 1 week? Well, you don't have to only do 1 week, but okay. I paused. I didn't say anything outside the PayPal discussion. Want to kind of show a couple other stocks. So we saw we went down, and I just kind of paused. I didn't say anything. We're still on the PayPal. PayPal looks very much like Boeing. Okay. Now, when we also take a look at some other stocks, I just want to show some other stocks in closing here. We talked about continuation patterns a lot, right? And if you look at Dash, which I don't think a lot of people really understand how big that is in terms of kind of, and maybe, by the way, you got Uber Eats, you got Dash. There's a surprising number of people that just want the food delivered to them, okay? Now, if you look at Datadog, now, by the way, that's more the continuation pattern. You could say it's a slight cup and handle. The one that's also been the example of the diagonal break is Datadog. And if you take a look at, let's say this, what you're going to now notice is a little 1-day pullback, pop, 2-day pullback, wasn't much of a pullback, another pop. This is classic example of momentum, textbook momentum, okay? And these are ones that if you go back and really take a look at, let's say, some of these other ones, I'm going to also make mention of Autodesk, okay? Autodesk has a classic flag type setup where that MACD, which has not been green for a while, that's trying to reverse. We're going to keep an eye on Autodesk. Of course, when we actually talk about Google, Google has also kind of been in a flag-like condition. Look at where the moving averages are, getting a little pinch. Could this be the bounce and to where it actually turns into another run? When we also take a look at, let's say, some of these other stocks like Zscaler. Zscaler has been a nice rounded saucer, some people call it. I'm just going to call it a cup. What's interesting about this one is it's come all the way back up to the prior high, and it's done this in the face of this large red candle, and the bullish investors are saying, what red candle? I don't see any red candle. All I see is 315, the investor says, hypothetically. But now this is another one we're going to kind of keep on the here. Could this actually come to the upside? Because when you look back on that, this just looks like a big bullish flag, okay? Now, by the way, if you'd like to trade weekly charts, what we talk about on the daily charts still applies in terms of timing, okay? So these are going to be some of the stocks that we actually watch. I do want to say two more, and I'm just going to flash them. Dell stock, okay? Dell stock, we're going to be watching that, and we're also going to be watching ALB as well, okay? So a couple stocks to watch, okay? Our focus here today was kind of repracticing on these resistance breakouts, using buy stop limit orders, and also talking about some previous examples that we pulled up. We mostly focused on kind of a split between verticals and also some stock buying strategies. Stay tuned for Cameron May coming up right at the top of the hour. Also, and he'll be actually talking about cover calls and cash secured puts. Reminder that I'm going to send this list to you. This is the playlist for our class, so you can go back and review previous classes that we discussed. Also remember, this is our page on YouTube. That way you can actually see all of our content right on YouTube, right on your mobile device, as well as your computer. Now, I'm out of my time here today. I want to thank you so much for your comments and your participation. Thank you, Rachel, as well. Also, remember with what we discussed, remember the workshops, go to schwab.com/events. And also remember with what we discussed, it was done for example, illustrative purposes only. And this has been the class on trading technical indicators, focusing on breakout setups. Thanks so much. Stay tuned for Cameron coming up next. Bye-bye.